The U.S. stock market is currently closed. Trading for BigBear.ai Holdings Inc. on the NYSE concluded on October 10, 2025, with a closing price of $7.22, representing a daily movement of negative 3.60%, or a decline of $0.27 per share. Now, here's what you probably didn't see coming. While the stock closed down significantly, the preceding week was marked by exceptionally bullish options trading activity, specifically a massive surge in call options volume that dramatically outpaced puts, suggesting a segment of large sophisticated traders were positioning for a major upward move despite the daily price retreat we saw on Friday. This stark contrast between the immediate share price action and the conviction of institutional options positioning is the core tension we need to analyze for BigBear.ai stock right now. It forces us to ask whether the daily drop is merely noise in a highly volatile stock or a genuine sign of weakness that sophisticated players are trying to buy under the radar. The common belief about BigBear.ai stock is straightforward. It's a speculative play in the hot artificial intelligence space, heavily dependent on U.S. government and defense contracts, which lends it both credibility and significant risk. The AI buzz has driven its spectacular recovery from 52-week lows near $1.48 to its current range, pushing the narrative that this is the next Palantir Technologies Inc. for the military-industrial complex. However, the reality is far more complex and sobering. BigBear.ai is grappling with deep operational friction that the massive stock appreciation and exciting contract announcements often obscure. The key challenge lies in its revenue conversion, specifically turning a growing backlog of contracts into actual recognized top-line growth. Let's unpack the recent price action and institutional flow. The stock's dramatic volatility is immediately apparent, boasting a beta of around 3.18, meaning it swings more than 3 times as wildly as the broader market. This is not for the faint of heart, and it certainly isn't the type of stable growth vehicle you might find offered in a Schwab Intelligent Portfolios or a low-cost Fidelity Mutual Funds account. The recent price retreat to the $7.22 mark, following the high in the day's session that briefly touched $8.80, highlights this extreme instability. The high trading volume of over 236 million shares in the last session, significantly above its 30-day average volume of about 95 million, suggests a massive internal struggle between buyers and sellers. This kind of volume with a negative close often points to institutional distribution, but here is where that options activity throws a wrench into the simplistic narrative. When you see such a pronounced skew towards call buying, often concentrated in short to medium-term expirations, it implies a belief that an imminent positive catalyst, like a major contract announcement or an analyst upgrade, is expected to drive the price higher, irrespective of the daily selling pressure we saw on Friday. This is a battleground stock, and the sheer number of shares traded makes it a favorite for platforms like Robinhood stock trading users and active traders using interactive brokers trading tools, who are drawn to its potential for quick, large percentage gains. The recent financial reports provide the tangible reality against which these market expectations must be measured. The second quarter 2025 results were a significant letdown for growth investors, with revenue declining 18% year-over-year to $32.5 million. Management even had to revise its full-year 2025 revenue guidance down to a range of $125 million to $140 million, which implies a revenue decline of up to 21% for the year. The reason for this significant drop? Disruptions and a slowdown in programs supporting the U.S. Army as the federal government works to consolidate and modernize its data architecture. This is a brutal reminder of the single client concentration risk inherent in BigBear.ai's business model. Its ability to win new business is not the problem. Its contract backlog actually remains strong, sitting near $380 to $418 million. But a backlog is merely a list of promised future revenues, not cash in the bank now. The challenge for the company is one of execution and delivery cadence, converting those fixed-price government contracts into predictable quarterly income at a sustainable margin. The net loss was also substantial, hitting $228.6 million in Q2 2025, albeit largely due to non-cash changes in the fair value of certain derivatives. Even stripping out these items, the adjusted EBITDA margin remains deeply negative.
This lack of profitability, coupled with the ongoing dilution from capital-raising activities, is the structural headwind most serious investors using platforms like Fidelity or SoFi Invest are worried about. On the institutional front, the picture has been getting brighter, which helps explain the recent stock appreciation. Major institutional investors, including Vanguard Group and BlackRock Inc., significantly increased their positions in the second quarter of 2025. Citadel Advisors LLC increased its position by a staggering 420%, and JP Morgan Chase & Co. saw an even greater percentage increase. This institutional buying spree, accumulating millions of shares, signals that big investment houses see the company's current valuation, especially given its strong cash balance of nearly $391 million as of June 30, 2025, as an attractive entry point for a long-term defense AI play. They are betting that the revenue conversion issues are temporary and that the company is well positioned to benefit from substantial future government spending, such as the major defense and homeland security initiatives currently moving through Congress. This is where the narrative splits. Retail enthusiasm centers on the price action, while institutional confidence hinges on the balance sheet strength and long-term contract visibility. The core business for BigBear.ai is providing AI-powered decision intelligence solutions, largely to the defense and intelligence sectors. The company's platform uses artificial intelligence and machine learning to process complex data and provide predictive analytics for mission planning, supply chain management, and digital identity. Recent news like the partnership with SMX to enhance maritime domain awareness for the U.S. Navy and the collaboration with Smiths Detection to advance airport security via its Pangiam acquisition underscores its specialized niche in both defense and border security applications. The company's legacy in the defense sector since 1988 is a key differentiator against more commercial-focused rivals. However, the commercial segment, while growing, has not yet picked up the slack from the federal contract turbulence. Looking ahead, the tension between expectation and reality will be tested by two main factors: commercial expansion and government spending stabilization. The market expects BigBear.ai to become a strong commercial player like Palantir, a company that has successfully used its government background to grow its commercial segment. BigBear.ai CEO Kevin McAleenan has openly acknowledged the need to expand its commercial footprint, particularly internationally, citing a significant partnership with leading companies in the UAE. The future success of BigBear.ai stock depends on whether management can successfully execute this transition. The risks remain high. Continued revenue decline in the federal segment, especially if government infrastructure modernization efforts cause further delays, and the perennial risk of shareholder dilution as the company burns through cash to support operations. The opportunity, however, is substantial. If the company can successfully leverage its massive cash reserve to acquire accretive assets or ramp up organic commercial sales, and if the promised government funding materializes without significant execution hurdles, the stock has the potential for a massive repricing. The institutional accumulation suggests that smart investment firms believe the upside outweighs the risk, betting on a successful turnaround over the next 2 to 3 years. For those utilizing online investing tools like the Interactive Brokers platform or Fidelity Investments, this stock will continue to generate highly complex technical and fundamental signals that require careful interpretation. Comment below how many shares of BBAI stock you currently hold, or if you prefer Palantir Technologies Inc. for a defense AI play. Your engagement helps us understand the community's sentiment on this highly volatile name. The next major catalyst will be the third quarter earnings report, currently expected around November 5, 2025. That report must show tangible signs that the strong backlog is beginning to translate into revenue, or the market's current cautious expectations will swing sharply negative, putting severe downward pressure on the stock. Until then, BBAI remains a complex holding, a stock where high-conviction institutional buying sits right next to revenue contraction and extreme price volatility, making the current reality a true test for any long-term thesis built on future government AI spending.